Welcome to OpenECRI's Trader Training. My name is Toby Gennaro. What I'll be talking about today are popular index markets and why you may want to trade them. Let's take a look. Let's get started by way of an introduction to index futures so we can all get on the same page. So what is an index? An index is simply a basket of companies represented by a single market. This index is termed the cash market or the cash index. The most popular index markets that are widely traded with the most liquidity are names you will recognize, such as the Dow, the S&P, the Nasdaq, the Russell 2000. The German DAX may not be as recognizable by name, but it consists of major companies that you do know, like BMW, SAP, Merck, those kinds of companies. So in looking at these various index markets, you can readily see that the Dow is comprised of the 30 major American businesses that represent this index. The S&P is represented by a larger group of 500 businesses. The Nasdaq consists of primarily technology corporations, and the Russell 2000 is an index of small cap companies. The DAX is similar to the Dow in that it represents 30 major German businesses. Just a point of clarification on the index markets if you're not accustomed to trading these contracts. The cash index itself is not tradable. This is what a futures contract does. It actually securitizes the index into a financial vehicle that we can use to trade it. OpenECRI offers a secure platform for execution of these contracts, and there are no data fees to get real-time quotes on any of these index markets. OpenECRI offers access to a wide range of global market indices, which is fantastic because you can pick and choose which markets you want to trade without having to factor in the data access fees. So the question becomes, which markets should you trade? And the rule of thumb on this is to focus on the index futures with the most volume and volatility. One other consideration would be to look at the tick values of the various futures contracts for risk management purposes. As an example, the Dow versus the Russell contract, the tick values are $5 per tick for the Dow and $10 per tick for the Russell. This simply means that you can trade two Dow contracts as opposed to one Russell contract with the same amount of risk capital. For example, if you're trading two Dow contracts, then you have the ability to take profit on half your position during the trade to get the trade to break even quickly and reduce your risk of loss. This gives you the ability to manage your trades and your risk more closely with the lower priced contract. To do the same thing with the higher priced contract would require a risk of $20 per tick on the Russell. So this can be especially valuable if you're working with a smaller account size. So when I'm talking about trading the Dow or the Russell index, I'm really saying it's the YM or the TF contract that's actually tradable. And this chart is just a breakdown of the cash markets I've been talking about along with their corresponding futures contract symbol. Here's a few good reasons to trade index futures. There's great liquidity and volume in these instruments. Index futures are traded professionally by traders around the world, so they are very technical in nature, which is good. And the leverage provided by these derivatives enables them to be accessed by all traders. In other words, you can trade these contracts with a fairly small account. Depending upon your strategies and setups, futures contracts are great for intraday trading, or if you're working from the higher time frames, they're also great for swing trading too. I personally trade index futures on an intraday and a swing basis, and the nice thing about these contracts is that they move, and they move a lot. So there's plenty of volatility in these markets, and volatility means opportunity to find the particular trade setup that you may be looking for. So if you're interested in learning more about futures trading, check out the OpenECRI website under Education and look for other trading videos and webinars, or you can call customer service for more information and educational events. Thanks for watching OpenECRI's Trading Education.